What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss the fourth stimulus package update, stimulus check update, daily news, everything going on here in our country, in Washington, D.C., and everything you need to know about on a daily basis. If you haven't subscribed to our YouTube channel yet, make sure to subscribe down below so I will keep you up to date with everything. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And thank you so much for giving these videos a like. President Biden met with major CEOs of major corporations today over the Build Back Better package, the stimulus package.
Well, Kelly, the White House is trying to resuscitate support for its signature social and climate spending package, and the backing, at least broadly from corporate America, so far has been elusive. So today, CEOs from companies like Ford, HP, Etsy, Microsoft, and others will be at the White House to hear from the president directly on this. Cummins chief Tom Linebarger is going to be one of those executives that we hear from, and I'm told that he is going to be touting some of the climate elements of this package, specifically the tax credits for hydrogen production. Likewise, CNBC caught up with Salesforce co-CEO Mark Benioff on his way in, and he also said it's about sustainability.
Look, we're in a climate emergency. That's why I'm here.
But executives are going to have to be walking a tightrope here. GM CEO Mary Barra also chairs the Business Roundtable, which has opposed the tax hikes at the core of the funding for the package, specifically a 15% global minimum tax and taxes on foreign earnings as well. I'm told these executives are going to be promoting some elements of the package while keeping a hard line on taxes. Manufacturing lobbies have also been pressuring Democrats for months to vote against this package. But if there is going to be a path forward, Kelly, the president needs more ambassadors from the business world, especially with skeptical moderates warning that the package could spur inflation and hurt growth. Kelly?
Absolutely. Kayla, thank you very much. Kayla Tausche with the latest at the White House.
Meanwhile, a major decision from the Fed and Federal Reserve Chairman Jerome Powell, they decided not to raise interest rates yet this year. They decided that they will raise interest rates likely soon. So interest rates have not been raised yet. Federal Reserve Chairman Jerome Powell said, quote, "In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% long-term level, the economy no longer needs sustained high levels of monetary policy support." This is the stimulus that the Fed is buying in bonds and basically the bonds. This is different type of stimulus that the Fed is buying every single month in here, and they're tapering that down. Okay, he says that is why we're phasing out our asset purchases, like I just mentioned, in ways we expect it will soon be appropriate to raise the target range for the federal funds rate. Interest rates. Okay, Federal Reserve Chairman Jerome Powell said on Wednesday, the FOMC's decision is from the Fed latest step towards pulling back unprecedented stimulus deployed as the emergence of COVID derailed the global economy. The Fed has kept interest rates near zero and purchased trillions of dollars in Treasury and mortgage bonds for nearly 2 years to keep borrowing costs low and financial markets flowing through the pandemic. Economists credit the Fed's massive deployments of trillions of dollars in fiscal stimulus and the speedy development of effective COVID vaccines and the rapid recovery of the U.S. economy. However, the stock market did not recover today, as both the Dow Jones and the S&P were negative again. Not that much. Well, the Dow Jones was down 129 points again today. It was up most of the day and then dropped actually on the Fed's decision. So not a good day yet again as the stocks continued to slide. You can also see here another 265,000 individuals are likely going to file jobless claims yet again this week. That is expected to come in tomorrow morning on our weekly jobless claims here. So stocks continue to slide. even though they didn't raise interest rates, the stock market dropped yet again today. So, yeah, economy is just kind of struggling along here. Now, because they didn't raise interest rates, this is probably good news for most people. This means credit card interest rates won't go up, rates on home loans won't go up. Most interest that you pay will not go up. Now, this also means that interest on savings that you have in the bank won't go up either. So it's kind of a double-edged sword. But the reason the Fed wants to raise interest rates is it helps curb inflation. It helps keep it down. That's the main reason they want to raise interest rates. They do expect to raise interest rates up to 3 times this year. So that is the reason they're going to raise interest rates. So generally, that's the reason they're doing this. That's the reason they say they're going to do this. So a lot of people say, why are they going to raise interest rates? And that is the reason. So the reason they're going to do that is because inflation, based on the last 12 months, the December reading was up 7% over the last 12 months. And remember, inflation is up all across the world. We have some countries in the 20 to 30% inflation rates. So yeah, a lot of countries have inflation way worse than us. If you've been watching my show, you know I've kind of shown you that here sporadically. We're up 7% year to date over the last 12 months, which is pretty bad. It's actually the worst it's been in 40 years. So 7% is nothing to sneeze at. A lot of people are feeling the pain right now, and due to a recent report or a recent poll, 91% of people are very, very concerned about inflation right now. So it's a really, really big thing. It's the worst it's been in 40 years. And to help control inflation, the one thing that they can do is to raise interest rates, believe it or not, and that will help bring down inflation. I know it's kind of it's an economic policy thing, but that will help bring down inflation a little bit. If you've been watching my show for a while, before this even happened, if we go back to last year, when you come out of um, recessions, this is a kind of typical thing. Okay, when we had the 2008 2009 recession, we had this happen then as well. If you kind of study recessions and depressions, what happens is when you're at the bottom of the recession or the depression, you don't see any inflation at all, or sometimes you see deflation. You see the opposite. Okay, and then what happens is when you come out of it, when you see the economy start to pick up, that's when you see the inflation, because the economy is making up for what happened before when you didn't have the growth. Okay, so this is somewhat normal. And we've seen this time and time again in the US economy and other economies here as well. So again, I actually said this like a year or two ago. It is somewhat normal. I know this really doesn't make a lot of people feel better, but when we look at like gas prices, now gas prices are a little bit different because gas prices went down dramatically when the country shut down, again, due to supply and demand, because the country literally shut down because of the pandemic. And that was due to supply and demand. Gas got down in the $1-ish range, and nobody was driving, so gas prices plummeted. But again, you kind of see this. You see deflation, not inflation, when uh, when you have a recession. Okay, so when a recession happens, you don't have the normal inflation. Remember, inflation, a little bit of inflation, about 2% is normal. 2% every year is normal. Right now, we're seeing 7%. So we're seeing an extra 5% right now. Okay, and the reason for that is because during the pandemic in 2020-ish, a little bit after, we weren't seeing that normal 2%. So we're getting a little bit of that extra 2% now. And we're seeing a lot of supply chain issues, and that has really helped exacerbating a lot of the stuff. We're seeing a lot of cars get way over 7%. If you go to try to buy a car right now, it's just way over 7%. Things like that. Meat, gas, a lot of these things are just being really kind of taken advantage of because of the pandemic, because of supply chain issues, and we're seeing a lot of issues because of the pandemic that are kind of being taken advantage of, or because of the chip issues, the computer chip issues, the supply chain issues, and we're seeing this happen all across the world and in America. It's not just particularly in America, of course. We're dealing with it here in America, right? It's only really matters to us, right? Each individual person, but this is happening actually across the entire globe. Meanwhile, here's actually a very relatable interview or kind of Zoom conference call from Pramila Jayapal. She's the leader of the Democratic Progressive Caucus, talking over a Zoom conference call to try to lower the cost of prices and meat prices and several different things. She's the leader of the Democratic Progressive Caucus. And one of the initiatives that the White House is trying to do is to lower the cost of meat and several different price reductions here. Listen to what she's saying. Now, her video conference here, her video feed is not that great, but just listen to what she's saying.
Thank you, Mr. Chairman, for this very important hearing. And my colleagues, we do have an agenda. It's to fight for Americans to be able to have choice, for consumers to be able to shop at local grocery stores, to stop the consolidation of industries where that consolidation results in higher prices. That is the agenda that I think we are very focused on. And in many situations, it is actually a bipartisan agenda as well. And I appreciate that. Amidst the new pandemic wave, the American food supply chain is hemorrhaging. Products are disappearing from shelves or listed for far higher prices. Essential workers are subject to massive COVID outbreaks and unhygienic conditions. And in contrast, dominant food suppliers like Tyson Foods have record profits and CEO pay. In fact, just a few months ago, my home state, Washington, our state's attorney general sued Tyson Foods, Inc., Pilgrim's Pride Corp., and a number of other big chicken producers for conspiring to inflate and manipulate prices, rig contract bids, and coordinate supply reductions to boost profits. As AG Ferguson said, if you've eaten chicken in the last decade, this conspiracy touched your wallet and cost middle-class and low-income Washington families more money to put food on their table. The unprecedented consolidation of these companies in the food supply chain has driven out competitors and has ignored poor working conditions and increased consumer prices. As dominant food suppliers consolidate, profits normally funneled into local communities get siphoned out to Wall Street. For example, in the last 2 decades, Tyson and many others have acquired dozens of smaller firms. Mr. Maxwell, as an economist and co-founder of Farm Action, how has market consolidation in the supply chain impacted the profits of local farmers?
Concentration has stripped the farmer of the market. The fact is, the market is dead. We're not here today to talk about government intervention into competitive markets. Farm Action is here today to talk about government safeguards in markets that have no competition. That is the reality that the farmer faces. 1 or 2 buyers for their cattle. They're competing directly head on with their buyer. The majority of the cattle are either owned by the packer or controlled by the packer. And that's the same person that the farmer, the cattle producer, has to sell their livestock to. They simply, the packer just simply slows down its purchasing in the marketplace, lowering the price the farmer gets and put the money in their pocket. It's that way in every sector. America's farmers farm dependent upon government subsidies, and they're being driven out of business by the concentration of power.
Thank you.
They're losing their businesses and they're losing their rural communities. It's a hollowing out of America.
Thank you very much. Access to essential items has been particularly difficult during the COVID-19 pandemic, and there have been extensive outbreaks at places like Tyson Foods in my home state of Washington that resulted in plant shutdowns and even deaths. Ms. Johnson, as a food sustainability expert, can you discuss how the pandemic worsened the working conditions in the consolidated food industry?
Thank you for the question, Congresswoman. Yes, and COVID has created a set of risks in the workplace that we're all trying to understand how to deal with. it's dangerous to go to work in a way that it hasn't been before. And the dangers fall most heavily on those who are also poorly paid and already endure dangerous workplaces. Meatpacking in particular is an extremely dangerous profession with very high turnover and a vulnerable workforce. So we're layering on top of existing risks another challenge. And I've heard that this idea that people don't want to go to work coming up as if it's a preference. People are afraid to go to work, and they are trying to protect themselves and their families while also trying to afford food and meet their basic needs. The pandemic has shed light on dynamics that were already there, that have really been there since the beginning of the United States and our food system, and its premise of relying on exploitative labor practices. And so what we have now is an opportunity. It's not opportunistic in a exploitative sense, but it's opportunistic in that we can see what's before us, and this is an opportunity to make change and remedy the unsafe working conditions that so many people endure.
Yeah, so let me know your thoughts, because the price of groceries, the price of meat, and the price of all these different things has really gone up here, and they're trying to figure out different ways to lower the cost of this, and we'll see what can be done. Also, according to multiple reports, Supreme Court Justice Breyer is maybe going to retire. And President Biden will be able to appoint a new Supreme Court justice. Now, this Supreme Court justice is already a Democrat, so the Democrats will not be gaining a new Democrat. They will just be replacing a current Democrat Supreme Court justice. So, Supreme Court Justice Stephen Breyer is 83 years old. He was appointed by Bill Clinton, and apparently, according to new reports, he is possibly going to be retiring. It's not been confirmed yet, but if he does retire, then current President Biden would be able to appoint a new Supreme Court justice and get some new life into there, some new vigoration into the Supreme Court. It won't really change the dynamic in the count. Remember, there's currently 6 Republican Supreme Court justices in there and 3 Democrat Supreme Court justices on the bench. There's 9 Supreme Court justices there. So the number would stay the same with 6-3, but there would be a new person in there. So this is pretty big news there, and it would kind of rejuvenate some there if this happens here. And apparently, this is President Biden is apparently pretty excited about being able to appoint his first Supreme Court justice there. So I'll keep you up to date here on this as well. Remember that Supreme Court justices get to stay there for life or until they decide to retire. Some of them don't retire, they literally stay there for life, or they decide to retire. So it's up to each individual person what they decide to do. So remember that Supreme Court Justice Ruth Bader Ginsburg literally stayed there till she passed, or they can stay there till they retire. It's up to their decision. So yeah, this is kind of a new breaking news story. We'll have to see what happens here. So let me know your thoughts here down below in the comments. I will keep you up to date here. There's some new information here going on here with the child tax credits here, as well as they also, I'll update you guys here on the next video on that, as well as they try to decide here on a new stimulus going forward here. There's lots of talks here going forward on a new stimulus development, as they're deciding on multiple different things here on new stimulus for businesses, new stimulus for people, and Nancy Pelosi has also just decided that she is going to run as well for her next term. In October, she was not sure if she was going to run again or if she was going to retire. She has also, or in converse, she has decided she is going to run again for re-election. So there's kind of a lot going on here. I'll keep you up to date here with everything. Make sure to subscribe down below so you don't miss out on new videos. It's completely free to do so. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. You can click here to watch my newest video next, And you can click here to see new money that was just approved for low income people. You definitely want to check this out if you haven't yet. There's money that you can get right now, and it definitely could help you out. So click on one of those videos next. Thanks, guys, and I will see you in the next video.